What is up? Simple Passive Cashflow. Now, I'm going to be going over what the heck happened with this FTX debacle, going from the moon to bankruptcy. And it all started off with this character, Sam Bankman-Fried. People call him BF because that's his Twitter handle. And apparently all the news that comes out and all the communications come out goes through Twitter. And apparently you don't need to wear pants these days because this Sam guy likes to walk around in shorts all day long and t-shirts. But maybe I'm just getting old or old-fashioned, but I'm going to be putting in my color, being in kind of the same situation as a operator at fund manager. And some of the differences, and this is exactly why I don't invest in crypto and even staking, which is, if you remember back to 2021, even earlier this year, a lot of people were clamoring over, oh, you can get 8% investing, or not really investing, but staking a coin, like a stable coin, maybe even getting 10, 20% plus. And this really illustrates the no transparency and what the heck these things are doing and how they're commingling funds. In this case, Sam's company, FTX, and his Alameda Research, which is more the trading side of the business. So this it's funny because all like the news channels and even a lot of the big professional trading groups like Circle Capital, BlackRock, those type of guys, they all had investments in these guys. So these guys duped them all. People call them the JP Morgan of crypto because recently it came in and bought a lot of people out in distress. And it's like a crypto savior in a way, but it all came through in a series of events. FTX is a Bahama-based crypto exchange. So it's similar to BlockFi. Binance is their big competitor. But I think a lot of crypto enthusiasts always say, hey, just because this happened, it doesn't mean that crypto, Ethereum, or the cryptos are bad. What happened here was the exchange, right? So the exchange is like where somebody who they don't want to deal with the cold storage, like a little USB key that they're afraid of losing the password and actually losing the device. They put it on an exchange such as FTX, and which puts a lot of trust in FTX, right? Because you're putting your value into their storage. And for a company that hasn't been around for very long, and in this case, obviously commingling funds on other projects that they had, which was their own stable coin. This is the type of stuff where it goes bad. And this is exactly the reason why I don't really invest in crypto personally, because, and again, call me old fashioned, but I just don't really believe that there's no value to it. Like people will argue all day, blue in the face, that it is a commodity or stored of value like a currency. Yeah, I'll give you that. But at the end of the day, it's come kind of catastrophe or whatnot. People live in it. Does it derive value? Can you literally eat the thing, or does it provide utility? Other than a store of value, it really doesn't. And this is why I keep coming back to real estate. Real estate you live in, you can cash flow in it. And especially when, the demographics are in the right favor, and especially in the workforce housing sector, things just make total sense. And you also combine that with the fact of the tax point of view with real estate. Now, I'm not going to go down that rabbit hole because, I think for most of our investors, the taxes is one of the big reasons why they even come to real estate and invest in our projects where, you're having part of that passive losses and using that to possibly offset your ordinary income, certainly your passive income. I'll just say that's all new to you. Go to simplepassivecashflow.com/tax. Learn more about it there. But again, what happened here, right? FTX kind of blew up in an exchange. You've seen them being promoted by all these celebrities like Giselle, Tom Brady, countless other professional athletes. They're all being promoted. And even that Graham Stephan dude, who a lot of people look at his channel, and I admit, like, some of the things he says are pretty thought-provoking. They're just paid to promote FTX, and a lot of people got wrapped up in it. No different than crypto.com, right? Crypto.com has the old Staples Center that the Lakers play in LA. I forget where FTX's stadium was. They have a lot of money from this venture capital to throw into marketing to create this whole facade. No different than, how we tell a lot of folks. There's a lot of people with podcasts these days that are coming across as But I think we've personally come to a point within our organization where we've passed over $1.2 billion of assets under ownership. We've gone through some of the pitfalls, the lessons, trying to come out the other side of it on some of projects. And we've gone through not that we're just not a fake it to make it organization put together by fake social media followers, which is why we say come and meet us, meet other investors, and hear it straight from them. In this crypto world, it's all on these Discord channels, these servers, and fake friends that you find on Twitter. It's really hard to determine what's real or not. I would say even more in the crypto universe. But what you're going to hear a lot is this Alameda research company. Basically, it's a kind of a sister company where that's where the trading is going on back and forth, where FTX is supposed to be just an exchange where just passive investors, lay investors will go and store their capital there or get a change from Bitcoin to their stable coin or whatnot and other coins there. No different than a lot of these other, like BlockFi is one of them, the popular ones, or Binance. But so what happened, FTX and Binance kind of got into it. Basically, we'll link another video, which kind of shows in a little parody from the Office theme, but basically, the Binance guy, CZ, which is their Chinese leadership guy, I think at one time they were friends. Obviously, he's incentivized for FTX, their biggest competitor, to go down. But Binance kind of uncovered some revelations and put it out there on Twitter and created an S-storm and really showed light that FTX really didn't have the assets that they said they were doing. Basically, what banks do anyway, right? Banks, they only have a very small fraction of the assets on their balance sheet, and then they lend out a heck of a lot, like unbelievable leverage by most people's standard, especially for us, typically 20-25% down payment on a property, right? There's always equity there. But unlike banks, don't really play by those normal rules, and especially what was going on here. The assets weren't nearly enough to collateralize what was all going on. And the Alameda Research Group, the trading side, was doing a little bit of shady stuff. And what really should have happened, I think the biggest thing is they shouldn't have commingled the funds, which they were. And that kind of broke a lot of trust. And I think at that point, a lot of people, a lot of other influencers and other kind of sister organizations I kind of feel like they picked Sam's FTX company as a scapegoat. But basically, the guys, basically it hit the fan. Here's a screenshot of kind of the balance sheet that they had. Here's some of the tweets. And here's another reason why I invest in real estate. Like, it doesn't move as fast. And for some people, they enjoy like going on Twitter and like by the second update and reading this and reading that. For a lot of, I think myself and a lot of other investors, we've worked hard for at least a decade, and a decade is not that long, but we worked hard for a good amount of time and built up a sizable amount of wealth, where we're at the stage where we want our money to work harder from us. And we certainly don't want to be our heads buried in our smartphone reading all this type of stuff. And I think this is why the day trading is just not a big activity that a lot of us will do. And especially this crypto stuff, which is like 24/7, and the volatility is just tremendous. It'll give somebody a heart attack if they're to that point where they have enough and are more family oriented or quality of life oriented, certainly. But basically, on November 6th, sparked a lot of massive withdrawals. They froze their accounts. And one of the shady things that I personally saw was like even BlockFi had a part of their FTX's holdings in a way, and they've had to halt their operations too. This is exactly what I'll bring this home to a lot of investors I was talking to. And I was looking at these, like using BlockFi. I'm not just pointing out BlockFi as the bad character, even FTX. Like, there's a lot of platforms like this, right? It's like a lot of these crowdfunding websites out there. There's a lot of them. They're all jockeying for position. One of the things that they attract investors is, hey, you stake your coin here, and then we're going to take your coin and use it to fund other transactions or margin calls. Basically, what was the message? What the heck they're going to use your money, and thus give you 8%, 12%, maybe in 15%, or even 20% on some of these DeFi platforms. And it was a head scratcher, right? Like I think from what I see from a lot of new investors, they really jump after just pro formas, right? It could be the stupidest project with the worst technology, worst business plan, But if the pro forma, some PDF, shiny PDF says 35% IR, people are all over it. And I get it. Like with businesses, it's hard to evaluate, but that's why I like real estate, because real estate, there's always some sort of underlying value. Even if the price tanks, there's some underlying value. Take home flippers, for example, right? Like the private money lender that puts up the money for a house flip. They always tell you, you never want to be more than 70% loan to value, just in case shit happens and you can price that the property goes down 30% or 30%. You still have that equity there, so you're not underwater. The price may go down a little bit more, even in toughest times, the value holds there. There's commodity usage value, where this crypto stuff, I mean, it's really, we've seen what can happen here. It can go down to nothing because there's really no utility. And maybe that's what I'm being at. There's no utility there. But a lot of investors just jumped at the chance to make 8% right off the bat. That's a thing too, that new investors, they lack the patience to, they want that instant gratification, right? They want to put their money in and they want to see some returns trickling back the next month or even the next week after, or even the next day. And some, it was actually how these things work, or even the next second. I played around with it because I just wanted to play around with the platform too, but it was cool, right? I see as soon as I stake my coin, I see it, you're making that margin or return right there. But I think the problem that a lot of sophisticated, even semi-sophisticated investors were, they were like, they couldn't really put their finger on like, all right, I understand I'm staking my coin, but what the heck does that mean? On one level, what they thought that what that meant is, all right, they're going to be providing the liquidity for some of these margin calls or some of these other transactions that are going behind the scenes. But I think where the breakdown was is that they didn't realize the platform would be doing some unethical things and using that money in very high risk bets that they were making, where the platform would be taking the upside. It's no difference than if like I was to tell somebody, hey, we're gonna go invest in real estate, and say that in a PPM, right? Hey, we're gonna invest in real estate where we're gonna have good equity position and it's gonna be a pretty stable investment. But then turn around and not even invest in real estate, put it in, go to the Las Vegas, put it all on black, right? And then pocket the difference. Now that's extreme case, but you know, taking the money and maybe going and putting it in on Bitcoin, right? That is still a no-no in my opinion, especially on an ethical basis right there. But easy come, easy go. And this guy's net worth went from like 14 billion down to 0 in a matter of a week. And I think the lesson learned for investors is if something is too easy, then stop to think about it. But also gotta think too, right? I think for me, the reason why I didn't end up doing it is because I consider myself pretty informed investor. I know what goes behind the scenes in a lot of syndication real estate deals. And I know what potentially could happen in the crypto world with there's a lot of it is not transparent and it's hidden. What the heck they're doing with this money that you're staking with them? What are they doing it? And is that perhaps the fair price that they should be paying you is 30-40% on your money, right? But all that they're going to give you is the returns that you get as a passive investor. Basically, where else can you get better? Is whether it's fair or not fair, that's how supply and demand works, right? That's how pricing discovery is. And I think that a lot of that is hidden to the public on what goes on, especially in the crypto world. I don't claim to be an expert in what the heck goes on, but I speculate from my position on the real estate side. And I think that's where you have to have a lot of trust in the people that you're working with. I think that's the thing about real estate. Returns aren't astronomical and we don't claim them to be. It's just good old fashioned real estate. But I think the thing is, if you're working with the right people and you have a right community around you, you can take this counterparty risk out of the equation. And the counterparty risk is the house of cards going down. Now, if there's a market correction or something, I think, this, even in crypto, I don't think it's going to go down to 0. It might be cut in half, but I don't think that element is at play with real estate. If anything, your cash flow kind of suffers. But the main thing is you hold on to the asset, because real estate's a commodity, it's a usage, it's everything we said earlier, and it should basically come back to where it's at eventually. But yeah, if you guys thought this is interesting, let me know. Drop a comment below, and we will see you guys next time. Bye.